Hi, this is Mike Maloney, and I've got a special guest on this video with me, Jeff Clark, the Senior Precious Metals Analyst from GoldSilver.com. How are you doing, Jeff?
I'm doing great, Mike. Thanks for having me on.
Yeah, you've written some wonderful articles lately. But in this video, I want to talk about the gold-silver ratio because it is at 90 right now, which is, I think, just amazing. It makes me want to buy silver. I think there's something bad coming in the economy. I don't know when. I just know it's going to happen. And I want to buy gold. That's my natural inclination, but I can't with gold, with the gold-silver ratio, with silver at only 1/90th of gold's value. Tell us a little bit about the history of gold-silver ratio.
Yeah, it's very interesting. If you go back 100 years, the gold-silver ratio has only been higher than where it is now on two occasions, basically back in the early 90s. And you might remember back there in 1990, 91, it actually hit 100. And then back in 1940-41, the gold-silver ratio hit 97.3. So we've only been higher in recorded history twice than what we are right now in terms of the silver price relative to the gold price. It's quite amazing.
Yeah, for a couple thousand years, it was the global average was about 12 to 1 because that's roughly what the mineable supplies were. And so when you dig up gold and silver and they circulate as coins, it was just the free market, the price discovery mechanism, discovering how much gold and how much silver was in circulation. It's, if one of them was overvalued and one of them was undervalued at the time, Gresham's law would, people would spend the undervalued one into circulation first. And it's like a set of scales balancing all the time. Then it was pegged at about 15 to 1 for a couple hundred years. And then, we demonetized silver and relegated it to just small coinage and so on, and went on the classical gold standard. And about the same time, we hit the Comstock lode that just barfed out an immense amount of silver in just a few years. And then the Silver Valley in Idaho. So the supplies of above ground silver went way up, and the price of silver, from a mine, silver being mined, just fell through the floor. And so we had these real high gold silver ratios where silver's value, like right now, 1/90th of gold's value. So 197 point what in 19?
So 1940-41, it hit 97.3. And then back in 90-91, whatever that peak was in that year, I can't zoom in on the chart I happen to be looking at, but it hit 100.7. So other than those two periods, we're at a gold-silver ratio that's been, higher than recorded history. So you're right. The opportunity is clearly in silver. It's been in silver for a while, obviously, but the opportunity is getting greater and greater. And in my opinion, this just means there's a lot of pent-up energy that's going to come just boiling over at some point in the silver market where it, gold and silver go up together, but silver dramatically outperforms gold. And that's going to be quite exciting, I think, for those of us that own lots of silver.
Right. Back in 2011, when this ratio dropped down to below 50 here, I stopped buying silver and I was only buying gold during these months. And then when it went back up around 60, I sold that gold and bought silver, and I got 1.8 times more silver than I paid for.
That's amazing.
Playing the gold-silver ratio. But right now, I know there's a crisis coming. I know that people will rush to gold first. So I believe that we're probably going to see this spike up to 100 again. But then there's, these articles that you just wrote, there's something happening in the silver market that I believe you're going to be seeing triple-digit silver. I think that silver is probably a 10-bagger from here. I think you're going to see silver in the $150 range. It was 50 back in 1980. Can you name anything that is selling at a discount to its 1980 price?
No, there's no commodity that is selling below its 1980 price, and silver is something like 70% below its 1980 high. And every other commodity, soft commodities, agriculture, metals, they're all above their 1980.
Not just commodities, everything.
Right.
You know, you could buy a car for just a few $1,000s back then. I had a 81 Saab Turbo. I paid $18,000 for it. Today, that car would be $80,000 for a similar car. It'd be like buying a BMW M5 or something like that. You'd be paying about $80,000 for the same car. I had a 81 Mazda RX-7, and that was $13,000. A car like that today is about $50,000, something like that. And so there really isn't anything except computers. Computer chips may have gone down, but that's it. Everything else is more expensive except silver.
Except silver, that's exactly right. So that just really highlights the opportunity that's available and the catch up in the price that I believe, like you, that we're going to see.
Wow. There's also an inverse head and shoulders pattern on here suggesting that this will go up a little bit higher, but the opportunities are going to be gone pretty soon. And we're going to see in the crisis, silver will catch up like it did back in 1980. And we'll see.
No trend lasts forever. And the chart you're showing, you can see that the gold silver ratio doesn't stay at any one level for, a real prolonged period of time. So, the time is counting as to how much longer this one's going to last. And when it reverses, it will be too late to buy then, at least at, current prices. And that's where you get your 10 bagger, is if you're buying now, not if you're waiting until it reverses and starts to fall.
If you wait for the crisis to happen before you take a position in precious metals, you're going to be trying to invest in unaffordium and unobtainium. That's what I always used to say. So one of the points of the video here is anybody that's watching this on YouTube, you should sign up for the weekly newsletter at goldsilver.com, because Jeff has just done some wonderful analysis, and you'll be getting those articles as soon as they come out if you do. So go to goldsilver.com, sign up for the newsletter, and you'll get it in your email box as soon as it comes out. There's some great articles that we're going to cover in a few coming videos, and it'll show you why silver is going to be going back down into this realm here. So if it's at 90 now, and it goes to 10, which I believe it probably will, it means that your silver is going to outperform gold by a factor of 9. That's huge. That's huge.
Just look back at I think it was 1918. The gold silver ratio bottomed at 17. In the late 60s, it hit 15. In 1980, it hit 15 again. Mm-hmm. So when we're at 90, that shows you the kind of potential that's available, and that I think is going to happen. Imagine the rise in the price of silver for the gold silver ratio to get back down into the teens again.
Right.
It'll be tremendous.
Yeah. And that's where I think we're going to have these 10 baggers and stuff. You're going to see $150 silver. And here it is under 15. So anyway, that wraps up this video. Thanks for listening, everybody. And go to goldsilver.com and sign up for the newsletter so that you can get Jeff's articles as soon as they come out. We'll see you next time. If you like this video, give it a thumbs up, subscribe to our channel, click that little notification bell so that you get a reminder every time a new video comes out. We'll see you next time.